Hey, what's up, my friend? So, in today's episode, we have Jack Schwager on the show. So, I believe Jack doesn't need an introduction, but I'll do it anyway. So, Jack Schwager is the author of the Market Wizards series. Okay, so these are the books that he has written that has inspired a generation of traders, me included. So, if you want to connect with Jack Schwager, I'll put his social media profile in the description below. Now, during my conversation with Jack, right, we talk about number one, the behind the scenes, right, of Market Wizards, how we go about interviewing, right, these different traders from all around the world. Then he also shared, right, his approach to writing Market Wizards, how he actually decides what content stays in the book and what content doesn't make the cut, right, for the book. He also, talk about the significant changes that he's seeing in the industry. He shares why he doesn't believe in the efficient market hypothesis, which actually, gives traders opportunities, right, to profit from the markets. So we talk about all this and more in today's episode. Sounds good? Then go listen right now. So to kick things off, right, I'd like to hear, right, how would you describe your childhood?
My childhood, not particularly eventful. I grew up I emigrated. I wasn't born in the States. I was born in Belgium. I emigrated at the age of 4. Grew up in Brooklyn. Went to college at Brooklyn College, which actually most people don't realize, at least back then, was an excellent college. And really not a particularly eventful childhood. You know, so I went to parochial schools through high school, so it was particularly non-eventful in that respect. So nothing dramatic in my childhood, really.
Okay, so I hear the word eventful, so I'm not sure if this is appropriate to ask, but might you want to maybe share why that is the case for you?
Well, no, I mean, so I grew up in an urban environment, not particularly, not particularly, interesting, attractive environment. Um, so, later as an adult, I gravitated a lot to outdoors and everything. Sort of, I don't think I saw a tree until I was 13 years old. So, I think I'm attracted to what was not in my childhood. Sort of. So, not that I had a bad childhood; it just was nothing particularly interesting about it.
Okay, so
Pretty much just school, and that was it, really, and friends and typical.
what kind of like kid were you like in school? Were you more of the quiet type, right? Just floating
Yeah, I
around?
guess. I guess I was more, probably more to the quiet than outgoing. Had my group of friends like any kids would. Um, I was always kind of serious about getting good grades and studying and that type of thing. Um, did not have much involvement in sports as a kid. Later, as an adult, did various athletic things, but not as a kid.
And is it because there wasn't an interest in that as a kid, or is it because of your environment
Just
you're
wasn't
in?
exposed to it. I just wasn't exposed to it. I went to school. I went to school like all day long. Like I said, it was parochial school, so let's say. Um, I would get. It was like Jewish studies for the first half of the day, and then English studies for the rest of the day. And by the time you got home, it was 6. You eat dinner. You have a few hours of homework. Go to sleep. It was like tremendously uneventful. Um, and I didn't come from a wealthy background, so there's nothing particular, no particular things we did. I guess, yeah, the one thing we did do, one actually my best memories from childhood were the summers. So in the summers, my family always rented a bungalow at Rockaway Beach, and so I liked the beach. I liked the water. I liked body surfing, that type of thing. So the summers were good. I guess that's the only thing that really sticks out in my memory about childhood being fun. The rest
I
of it
can,
was pretty
s-
much just route.
yeah, I can see that, right? The smile on your face as you were describing the bungalow during the summer holidays.
Yeah,
So
it's mainly the beach and that in the water and so that part. So those were like the times where I would do something that was fun. During the school year, not really.
So from what I heard earlier is that the school year, like it's like your school day is pretty long. It's like, is it from morning to evening? That's the typical school day.
Because so it was like from 9 to 6 type of thing.
It's like a full-time job. It's like
yeah. So and then, like I said, you eat, you do homework, and you go to sleep. So there really wasn't much. There wasn't much, much free time and no hobbies to speak of really.
Is it because of the school that you happen to be in? That's why the day is so long.
Because it was like I say, it was like half the day was religious studies and half the day was conventional secular studies. So it's like a double school day essentially.
Okay, but back then I think not all schools structure their curriculum in this manner. I think some could be just morning to afternoon.
If you went to public school, you would have a normal normal day.
All right. Okay. So do you remember, like, maybe what are some things that happened in your younger days that kind of like shape who you are today?
I don't think so. Not that I can. My childhood, like, really, I just, like I say, I was serious about school. I liked reading. I remember like going to the library, especially as a young kid, was a thing I liked to do. So I guess I was a bit of a nerd even back then.
Were you good, like, in your academics?
I was good, but not great. I actually, oddly enough, the school I went to was a small. The high school was a very small high school. But we had just incredible number of students scored like crazy high scores on the SATs. So I wasn't in that league. So I was kind of average for the school I went to. But I did, I did well enough.
Okay.
But I wasn't outstanding in any way. I was okay, but I wasn't outstanding. Yeah, the one thing one disappointment I did have is I had the schedule worked that I liked math and anyway I wanted to take calculus and I couldn't I couldn't get it scheduled because it was conflicted with some other requirement I had. So I couldn't take it. So I remember trying to teach myself calculus in high school, and I really didn't get it, on my own. And then I went to college, and I took, I thought I was going as a math major, but I quickly discovered by my sophomore year, I realized I wasn't good enough in math really, and it was the right decision because, I mean, now I know that something like advanced calculus is kindergarten work in terms of mathematics. And for me, that was like, sort of reaching. And so it's a good thing. It was like my favorite subject, but I think to be a mathematician, you really have to have an innate talent for it. And I didn't have an innate talent for mathematics. I liked it, and I could, when I understood it, I was good at explaining it. For example, I wrote the first book I wrote was an analytical book called A Complete Guide to the Futures Market, and I felt it was necessary to use regression analysis as part of it. And I realized I couldn't talk about regression analysis without having an introductory chapter in statistics. And then when I did the initial regression chapter, I realized, well, that's only simple regression. I got to go to multiple regression. And then I realized there were all sorts of exceptions that had to be discussed. I ended up with like 6 chapters and I don't know how many, well over 100 pages of well, not so much mathematics, but well, it was math in terms. And what I was good at was because to understand, by having to understand it myself, I think I wrote that. I think my section on regression analysis is probably pretty good as a instruction for somebody, because for the very reason that I wasn't good at mathematics. In other words, I had to really understand it myself, and that made it. I was able, I think, to communicate, and also I could write. That's the one skill I discovered I did have, that I could write, and So I was able to convey that, but it wasn't the mathematical skill. I had the interest in mathematics, but not the skill. But on a preliminary basis, it made me maybe more capable, than somebody who's actually a mathematician to write something that could be grasped and understood by somebody who's more of a layman or lower level um, mathematics student.
So
So it did come. I actually did end up using it, even though I didn't end up majoring in math. I did end up using it.
so it seems like your strength is kind of breaking down complex topics into a layman
Yeah,
manner where people
I
can.
think I think that's everybody's good at certain things, and I think I'm good at taking something and putting it in a framework that it can be understood. Um, so, and that came up in the Market Wizard books in certain cases. Um, I know, like in hedge fund Market Wizards, had to talk about the what is actually a complex thing, the subprime bonds, but which are really put together from different tranches and that whole thing, and to actually make that understandable and readable is not easy, or it's actually something that I was satisfied that after I wrote it, you didn't have to know anything, but you could read it and get it if you wanted it. And I actually didn't know that I had been in markets, but I had no involvement in this whole area of subprime mortgages and all of that. So I had to kind of educate myself on it as well. And but because by doing that, by educating myself, then I'm able to explain it, to an audience.
Yep, it's a skill itself, right? To break down complex topics into something,
Yeah.
digestible. Yeah. So before we move on, maybe to the Markets Wizard series, I'd like to share, maybe, you know, what's maybe a story or something that brings a smile to your face, right, whenever you think back of your younger days.
About the Market Wizards books.
Well, it can be in your childhood days, maybe we're just starting out, finding a career, something that happened that,
Oh,
brings a smile to you.
gee, yeah, I smiled my face up. So,
So, for example, I can share an example. Like, so for me, I think one example is that when I was in, we call it polytechnic, about 17 years old, right? So, I was playing catching, right, with my classmates. 17 years old, imagine that. So they were female classmates. They're running around, and they run to the female toilet because they're female, and they carried some of my stuff with it, their laptop actually. And I was feeling a bit cheeky. I figured, why not just go to the female toilet and grab my laptop back? Not that serious after all. It's
yeah.
just my friends. So I did just that. Got my laptop out, came off the toilet, and I realized the discipline mistress was just standing outside of the door. So what happened next? I had to do some corrective work order for like 2 months during my holiday.
Mm.
So when I look back now, it kind of like brings a smile to my face, right? Being naive, silly, but it look back, that's fun times for me.
Yeah. I don't know, a number of things. I mean, I guess one thing I remember coming out of graduate school, I expected to get a job right away, and I was having, I wasn't getting any I went to employment agencies, and they were useless. And then I put an ad in the Times, position wanted. I just said, MA in economics, minor in mathematics, and I got a number of calls, many of which were just really hidden. They was subterfuge for sales positions, but they wouldn't tell you that. And I got suckered into going to one of them, and I could tell you that story. It's an amusing story, but I had one legitimate call out of the whole thing, and so it was my one legitimate interview, and I went for it, and it was for a commodity analyst position, and I didn't even know what commodities were. And in fact, I was asked about it, and the research director asked me, "Well, what do you know about commodities?" Education, getting an economics degree, you learn nothing about markets in general, but certainly nothing about commodities or futures. So I said, really not much. I mean, something like gold. That was my inane answer. But there was something about the interview that the fellow thought that I might have some potential, and he at the time was writing a column for Barron's. He wrote a weekly column, Commodities Corner, I think it was called. And so he was using these interviews. He would have the interview candidates write an article, which he kind of would use as kind of background research material. So he's kind of killing two birds from one stone, but also seeing who could fill the analyst's position. So like he gave me the assignment of writing an article on copper. I knew nothing about copper. So in Brooklyn, where I lived at the time, there's a large library called the Grand Army Plaza, which is kind of like the Fifth Avenue Library of Brooklyn. And this is way back, we were decades before the internet, so you really had to go to libraries to find stuff. And I literally lived in the library for a week, read everything I could on copper. There was like something called American Metal Market, I think, and the McGraw-Hill had a weekly, and I would go through years of this stuff and any books and articles. So I just kind of educated myself to become an expert on copper, and I wrote an article, and basically I ended up getting a job, and I was later told by one of the brokers who was a friend of mine that the research director had passed around the articles from the top candidates, and everybody said, yeah, pick this guy. So that's kind of smiled to my face because I basically wrote my way into a career. It was my writing that basically landed my job. And then a couple of years into the job, I started writing for was then called Commodities Magazine. It's gone through various changes, futures, and then it's changed again. But back then it was called Commodities, and I became a contributing editor. So that gave me some notoriety. Some people knew me from that. And that made it possible in a couple of years for me to go from an analyst to being a research director. So then I eventually ended up writing books. So basically writing has, but that very first job, just the fact that I just kind of, writing that article that everybody sort of thought was the best article got me my career. So I guess that's something I can look back and smile at,
Happy to hear that. So would you say that at that point you didn't realize that you're good at writing? So after that point, then maybe you look back, maybe I'm actually pretty good.
I didn't realize I was good at writing, as a matter of fact. Now there maybe were hints during college years. I remember, for instance, I took a history course, and we had to write an essay. I had to write an essay on the First World War, and turns out I missed the day of school. I had to be absent, and the next day I came in, and people said that the teacher had picked my article as to read in class as an example of, like an excellent article. I didn't actually get to appreciate it because I wasn't even there when she read it. But there were a couple of things like that where I wrote something and there was like a good reaction to it. So there might have been hints, but I never realized that this was something that I could particularly be good at, and I kind of just discovered.
Okay, well, that's really good one, right? So maybe now we can maybe move on and talk a little bit about the Market Wizards book, right? So I'm curious to hear, I think firstly, how do you prepare for a Market Wizard interview? Like, what's the process that you follow?
Okay. I don't do much preparation at all. I'd say the preparation is less than 1%. The actual work, the actual interviews, maybe 5%, and then the editing of the interviews is 95% of the work. So that's particularly the way I see it. So what I did in the very first Market Wizards book, and I kind of did the same thing in a way. So I had a list of, back then I had on index cards, I had a list of questions. And but what I ended up doing, which was successful, I kind of never changed it, was that I didn't use the cards, actually. So I basically had a conversation and let the conversation go where it went. Now, at the end of it, when the interview was over, I would say, hey, I had some questions. I want to make sure I hit everything. And I'd flip through the index cards. And most times I'd covered everything anyway. Occasionally there might be a question or two a few questions that might be relevant to that particular interview that I hadn't asked, and I would ask at the end. Uh, so there was really not much preparation. Once I did the set of index cards, which was pretty much common for most, maybe I added a few for certain people, but that was pretty much it. And I did no real preparation. I knew I had read if there was anything written on these people, which in many cases there wasn't. In many cases, these people hadn't been interviewed before, and in many cases they haven't been interviewed since. I mean, there were people I interviewed who very specifically never wanted to give an interview, and kind of made an exception for in my case, and that was the one interview they did. I mean, I can think perfect example of that might be someone like Bruce Kovner, who I don't think ever gave an interview. And when he agreed to do it, the first thing he said to me when we started the interview, I guess you may be wondering why I agreed to do this. And I said, yeah, sure. So he said, well, there's a lot of stuff appearing about me in the press, and a lot of it's not correct. And I figured I'd want one accurate narration on the record. And he kind of trusted me to give an honest portrayal. So, anyway, so it's not, as far as the preparation goes, really minimal.
So why do you think, as you've said, right, like people that don't really do interviews, they gave you the chance to let you interview them?
There's different motivations. I just gave an example of Kovner. Think back to the first book, Marty Schwartz. He said he thinking his parents would be proud to see him, in a book, and so that was his motivation. Michael Marcus, actually, who was a friend, and I knew. In fact, I took Marcus. In fact, that first job I told you about, the position that opened up was Marcus was the analyst. He was leaving to become a trader. So when he was cleaning out his desk, I was coming in my first day, and we met, and then we kept in touch. And while he was in New York, we would get together for lunch periodically. So I knew him, and he was also somebody who never gave an interview, very shy person, very, very, very low key, didn't want much exposure. And he kind of hesitated and didn't want to do it. And we had a mutual friend that convinced him to do it. So he did it, And once he did it, he was actually satisfied. So I spent literally 2 days at his home. At the time, he lived in Malibu, and interviewed him over the course of 2 days or something. First day was just part of it because I came late, and then the next day was a whole day, and we talked everywhere. It was in the house, walking on the beach, everything. And at the end, we had dinner, naturally cooked by he had his own chef there, cooked the meal. And so after dinner, he kind of pushes back his chair, and he says, this was actually good. This was a cathartic experience. So going through his whole life like that in our interview, it sort of lifted a burden from him, and he felt good. Although initially he was very reluctant to the interview. Some people, why they did interview, I never would know. I mean, I didn't necessarily know. Now, you might say in some cases, of course, if they're managing money, there might be also a motivation that's beneficial. It gives them greater exposure. Maybe if they're looking to raise more assets, then it makes it potentially helpful in that respect. But in a lot of cases, people I interviewed weren't managing money, or if they were managing money, they weren't open to new investment anyway. So there was not necessarily always a natural motivation. I think also after the first book, which became kind of well known and popular, people knew me because of the book. And one motivation was, as I got to the later books, like as I got to, say, Hedge Fund Market Wizards, there are a number of traders, let's say, who are in there, who actually started their careers because they had picked up the original Market Wizards book. So my book actually was the catalyst for them getting into the whole career. So you would say that's naturally a natural motivation, you know. So I remember one trader talking about his, I forget what the circumstances were. He was like traveling somewhere and he had time, and he went to a bookstore and he just found like a used copy of Market Wizards and bought it, and it was serendipitously led to his career. So that's also when you get to the later books, that's also a motivation.
How did you then come up with the title Market Wizards?
Don't know. I had the title. Like I mentioned, the first book I did was that analytical book, Complete Guide to the Futures Markets. I wasn't planning to write another book. I had the idea for Market Wizards, and I guess I had the title. I don't remember where I got the. I guess I just thought. I don't know. It wasn't. Doesn't. I don't remember where the original thought came from. Although I think I always believed it was a good title, and then 5 years after I'd written the first book, I got approached by a publisher who wanted me to do a series of fundamental books, analytical books. I had no interest because I did that more for reputation. I wanted to write what in my mind was the best textbook on futures at the time. And having done that, I had no interest in doing it again. And it was a lot of work, and that type of book doesn't sell. And when I say textbook, if you write a textbook in a like a calculus 1 textbook that becomes well used, then you can make a lot of money because it's a big audience. But if you're writing a textbook on something like futures analysis, that there's not courses. There's very few courses in that, and the audience is much smaller. So you never do that to get a large audience. You do it for other reasons. Like I say, my motivation was to write that type of a book for the sake of writing the book, not for selling a number of copies. In fact, I knew when that regression analysis section I mentioned to you, I knew by putting that in, I would decrease sales because I knew seeing that many formulas would scare people. So I did things that I knew would hurt sales, but I was trying to write a certain type of book. So I knew I didn't want to do that. I knew I wanted to do something more popular. And I had the idea of what was Market Wizards. And that was influenced, I think, because I knew some great traders. I knew Marcus, I knew Kovner, I knew some other traders through them. So I thought I had a starting group of traders that I could do, and I could find others. And I didn't do it because I had a full-time job as research director, which is a more than full-time job, and I didn't see how I had the time. But when I had that lunch and the publisher, I told him this idea. He said, "Dude, okay, can you do that?" And I agreed to do it. I knew it would be nights and weekends. But back then one skill I also had, I could be very, very focused. For example, when I wrote the Complete Guide to the Futures Markets, we're talking pre-PC. Maybe PCs were on the advent, but they weren't a common use tool. So we're talking doing graphics by hand. We're talking doing multiple regressions on a hand calculator. And besides all the writing, just doing the basic analysis work would be what you could do now in minutes in Excel. I could spend days doing. Just because you didn't have those tools. So I would literally be up at night and I would work through the night and I could be focused like solidly through the night and just get stuff done. And so in those days, my younger days, I could do something like that where I could be working a full-time job and then on my nights and weekends be intensely focused and somehow get it done. When I look back at it now, I don't know how I could do it, but it wouldn't seem feasible for me to do it now. Now, just writing the book seems to be enough. Forget a full-time job on top of it. Not to mention a commute and a family and everything else.
Yeah, you seem to me like someone who's actually driven more by purpose than money. Because whatever you're doing, like books, they don't really make much money, but you still choose to do it. Like the futures one, where it's harder to sell, but you have like a lot more like passion for it, or wanting to have something out in the market.
I never, when I wrote Market Wizards, I I didn't know it was going to be turning out as popular as it was. But no, money was never. I never think in those terms as that's my motivation. I think if you're motivated by money, your product is not going to be good. So I think if you're writing a book to make money, I don't know. I guess there are exceptions to it. Maybe people do that and they're successful. But in my case, that was never the way I would look at it. I think same in training. I think people who are really good at training, they're not doing it for the money. They're doing it because they like the challenge. They like the game. They enjoy it. They're not doing it because, hey, I want to get rich. Now, there are exceptions. And then they find a passion. So, but for the most part, I think people who get into trading because they think it's an easy way to get rich are usually not going to be successful, if that's their motivation.
All right. Yep. So I think I read somewhere you have written like 10 or 11 books, right? So among how many books is it? I just want to kind of like know the official
I think
number.
it's 12. Let me see.
It's 12.
There's 5 Market Wizard books. And then there's the Notebook of Market Wizards, which is kind of synopsis of the main lessons. That's 6. And then there's the Complete Guide to the Futures Market is 7. And then there was a 3-volume version of that. So that's 9. Not 9. That's at 7, and it's 10. And then there's a book called Market Sense and Nonsense. That's 11. And there's Getting Started in Technical Analysis, which is a short version of one of the 3-volume set, which was Technical Analysis. So in that case, it's 12 separate volumes.
So 12 books, right? Is there any particular book that you have the most feelings for, that it feels special to you?
Did I what I'm most satisfied with,
that you felt you have the most feelings for that particular book that you've written?
No, I basically, to be honest, and I basically felt satisfied with every book that I wrote. I think if I wasn't satisfied, I would have kept on working on it until I was satisfied. And each in its different way. I think the original Complete Guide to the Futures Market, which was revised years later and actually made it a little bit shorter, but back when I did it, particularly with the limited resources, I was proud of that work. I think it's a good piece of work. The Market Wizards books, I think, were good books. I mean, I achieved what I was trying to do. I was trying to do 2 things. I was trying to provide guidance to traders and understanding to traders on, if you look at the people that are really successful, what are they doing and what can we learn from them? So that was one main motivation. The other main motivation was I wanted to write something that was entertaining. And so being able to do both is, I think, is the trick. And insofar as I felt, at least personally, satisfied that I had done that in the Market Wizards books, I felt good about them. So I don't know. And then Market Sense and Nonsense, which was not a big seller, but I had personal satisfaction out of that, because what I was basically doing was calling out these misconceptions that I think are common, and I just was using a soapbox, to do that. And I think for people who actually bought the book and read it, probably liked it, but it's nowhere near the same exposure as the other books. But personally, I kind of was satisfied with the book.
Okay. And maybe going back to the Market Wizards, I think I read somewhere or heard on some podcasts where you can write pages, 100, 200 pages of notes, and then only 20 page maybe makes it to the book. So my question is, how do you then decide what goes in the book and what doesn't go in the book?
Yeah, okay, good question. What goes in the book? So basically, a little bit similar to the answer I just gave you for the other question. What goes in the book is I listen to the interview, and as I listen to the interview, I take down anything that I consider instructive, informative, insightful, helpful, and on the other hand, on the other side, anything that's interesting, is a good story, and so forth. So those are the things I'm pulling out. Anything that doesn't fill either of those 2 purposes, I basically excise. And that's how I'll go through, as I can go through, and I to put this in context, the interviews I do vary in length. I mean, occasionally they're short for reasons we can discuss, but many times they're many hours long, and they have been as long as a dozen hours, of total recording. So that's a lot of pages. If you would transcribe 12 hours of conversation, that's long. I don't know how many hundreds and hundreds of pages that would be. But the idea, therefore, is that what you're trying to do is you've got all this massive material. You're trying to go through and glean out the essence. Less is more. So I'm not trying to make the chapters as long as possible. I'm trying to make the chapters as short as possible without leaving out anything that I personally find is instructive or amusing and interesting. So in some cases that can end up still being a long chapter, but of course it still means a lot of stuff has been left on the cutting room floor. And that's part of the process. Another part of the process is, I don't know if you have an experience with this, you do interviews, but if you ever see transcriptions of interviews, we do a podcast and we're talking and it may sound fine, but if you transcribe it literally, word for word, like a court stenographer, you'll find there's a lot of sentences that don't end, sentences that are run on, subjects that get mixed up, grammatical, things that when you read it on the page are not grammatical. You may not pick it up when you're talking, but if you see it on the page, it doesn't work. So when you transcribe the actual literal word for word, you do not end up with readable copy. And so part of that process then is you use verbatim, whatever works verbatim, you use verbatim. But in most cases, you have to fix the sentences, so they read well. And in some cases, you have to complete the sentences because, you knew where the speaker was headed, but he didn't quite finish it. He picked up on another tangent, right? And then you have things going in order which is incoherent. So you talk about subject A and then subject B and C, and then somewhere around subject H, you come back to subject A, and it's just a mess. So, another thing I try to do is to get all the things on one subject in one section. And then where you start out may not be where you think the interview should start. You may want to start it somewhere else. So that's what I say. 95% of the process is editing. And I'll give you another interesting example. So I did an interview, and there was an interview in Hedge Fund Market Wizards where one of the traders referenced a famous psychological experiment. His point was that we misremember stuff. That was the point he was trying. And it's a famous psychological experiment where people were shown slides and there's a stop sign or not a stop sign, and then there's an accident. I forget the exact details and all of that. But then they were asked to, to recall what they saw. And the point was that people, when they were set up for it, they remembered something that they actually didn't see, So it's that type of experiment. And so he gave me like statistics and whatever he talked it. So I went back and I actually researched, I found the study. And there were things that, like if I was, talking about, I would have gotten things wrong too. So there were things that were wrong and they were just not, but I knew what he was talking about. So I fixed that section so it was factually correct, right? So it wasn't exactly the way he described it, but I knew exactly what he was trying to say. And by the way, when he read it, I don't think he knew that wasn't what he said. In fact, that's true in almost all cases. I think people, I always send people the finished interview before I publish it. So to see if there's anything I got wrong or anything that they have a problem with. And I don't think people realize that what I'm sending them is not the actual conversation. Yes, it's all drawn from the conversation, and I am trying to convey what they said as closely as possible. but it's not word for word, and I don't know if they even realize that. Because if you do it correctly and you capture the person's voice, you're just giving a clean version of what was intended, what was being said.
So am
So
I right to say
I'm very much cognizant of what it will read, what it will look like on a printed page. And so, unlike a journalist who has to be absolutely verbatim, um, I, I need to be verbatim in terms of being absolutely true to what the trader said or wanted to say, but I don't have to be verbatim to the actual word for word if it doesn't work on the written page, if that makes sense.
just one question? What is verbatim? I'm not familiar with that term.
Oh, what is that?
What is verbatim?
Oh, verbatim means word for word.
Word for word. Okay.
Yeah.
So some of the interview can go for like 12 hours, and I think you mentioned you would transcribe them first. Do you do the transcription yourself, or is there somebody to help you with it?
I did know, yeah. In the first Margaret Wizard's book, I had a secretary who I sent the tapes to, and I think she did the transcriptions. I did it that way. Now, more, recent books, I changed the process. I basically listen. I will listen to the recording, and I will stop it at any point where I want to capture something, and then I will redictate that portion into a new document, and I'll go through the whole interview, piece by piece. And you may have to go through the interview more than once this way, and you have to go through it slowly. So it doesn't, in that rare case like the 12 hours, it's not 12 hours, it's much longer. Although, to be fair, there are certain portions of that where you get into a conversation that you remember, hey, this didn't lead anywhere. And so you can let that play. And in case you're wrong and there's something all of a sudden that captures you, you could stop it. But in some cases, you might let the tape run for a while and not take down anything, because in my opinion, none of it was worth capturing.
That's a lot of work going through, man.
Yeah. So that's where the work is. Like I said, people think that a lot of times, I've had this comment a lot of times. People say, you're a great interviewer. And I say, really, I'm not, but I am a great editor. So my strength is taking those interviews and melding them into good readable copy. That's what I'm good at. As an interviewer, I don't think I'm great as an interviewer. Probably okay, but I don't think I do some things right. I think one thing I do right is I listen, which is very important, because so many, you can tell a bad interviewer when they go in with a list of questions and they hit a question and they're waiting for the answer to finish, and then they hit the next question. But the point is, the answer may itself lead to roads that are much more interesting than your list of questions. So I always listen, and if somebody says something, I then go off on that tangent. And so I think that's one thing, that's an interviewing skill, or not skill, but I think an interviewing tip that I think is good, which is something that I do. But I don't think I'm a great interviewer. There are people that I listen to. Let's say I'm doing a podcast, who I think are great interviewers, but I wouldn't consider myself.
Who do you consider great interviewers?
Oh, like this show called Fresh Air, a podcast called Fresh Air, and the main host is Terry Gross, and she interviews all sorts of people, writers, musicians, business people, everything you can think, every walk of life, famous people from all walks of life. And there's another one, another interviewer on that same program called Dave Davies. They are both superb interviewers. They ask like really good questions. They're great in follow up. They, in most cases, ask the question that you want asked. Somebody says something, you think, hey, well, what about that? They'll get to that. They'll ask that question. Um, most interviews, if I listen to it and I'm listening to the interview and I say, well, what about that? They don't ask the obvious question. It drives me nuts. So, but that's an example. That particular program, Fresh Air, Terry Gross and Dave Davies, I think are great. If I hold up paragons of what who I consider great interviewers, I would say they're good examples.
Right. And speaking of interview, I think I heard on another podcast, I think it was with Aaron Fifield, you mentioned that one of the more difficult interviews you had was with, I think, Tom Baldwin, right? Because he's just trying to, trying to escape, right? So my question is that looking back right now, how would you do things differently if you're in that scenario again?
Well, I had no, I don't think there's any interview that I ever did that I said, hey, I should have done this, because I always had my limitations, which weren't set by me. So in Baldwin's case, he didn't want to do the interview, okay? But he had it. But there's another trader that I got to convince him to do it. And so he agreed to do it. My luck, it was St. Patrick's Day in Chicago. And so he didn't want to do the interview to begin with. And we did the interview after trading hours. We're in his office and I'm asking questions. And every few minutes somebody comes in and said, we're going down to whatever the bar was. And he said, I'll be right there, And I knew that I couldn't leave a split second space between his finishing talking and my hitting him with the next question. And because it was like, I think I used the analogy. I might have used the analogy in that, for that interview, but it's like you're trying, like a photographer trying to get a picture of a bird before it flies away. And that's the way I felt that whole interview. And sure enough, there was one point where I hesitated for a second and he said, gotta go. And so that was like the shortest interview I ever did, but it wasn't by choice. And I knew I knew the circumstances at the time. It still worked. I still got enough material to make it work. It was not actually the worst interview. The worst interview was, which book was it in? I think it was in a New Market Wizards. And it was a fellow by the name of Gary Bielfeld. And this is kind of an interesting backstory. So those days I was a research director, and one of the things we had to do in those days was you'd have to put a little wire out at the end of the day on certain markets. The bond market was up because of this or down because of that. And you would say, well, there was buying by Morgan Stanley and selling by, and so forth. Anyway, there was one firm that kept on popping up in all these big names of BLH. And when I kind of looked into who the hell is BLH, I found that BLH was one guy in Peoria, literally. And this is a guy who's kind of trading thousands of bonds, That was an interesting story. So I got in touch with him. I went out to Peoria, literally Peoria, to interview him. And he, I don't know if you know the old Westerns, like, Gary Cooper. Do you know him as an actor? Okay. So Gary Cooper is kind of was one of these Western hero stars. But he was very, very terse, yup, nope, that type of thing, that type of personality he played. And very, very kind of rigid, wooden, man of very few words, but action. And Bielfeld, every question I asked him was like this short, he reminded me of Gary Cooper. Just, yep, nope, no, I couldn't get anything out of him. And sort of then, at one point in the interview, he mentions like how trading is like a poker. And I said, okay, yeah, well, how's it like poker? And he gives me like a, semi-interesting paragraph or two or three about the analogies between trading and poker. And I said, gee, that's fine. And he said, but you can't use that. So why? What's wrong? He says, well, I don't want people to think it's like gambling. I said, no, nothing you said. It's not, you don't make it sound like gambling. You're making adequate points, real points about the risk side of it and the probabilities. It's not anyway. So he could let me use it, but that was like the one short section that I thought was marginally interesting. But the Lottie interview just really wasn't very good. I mean, I made what I could out of it, and the story was very interesting. But that is the only chapter in any Market Wizards book where my narrative is longer than the interview, because the interview itself was so not successful, in that sense.
Speaking of narrative, what's your approach to writing the narrative?
So I use a format of a, an introductory section which talks about the trader and maybe related topics, depends on the situation. Then I have the interview, and then I have a conclusion section. So for that introductory section, I'm trying to make, create some interest about this trader. Now, a lot of the background of the trader comes up in the interview, so you can't necessarily you're not putting all the stuff in the narrative because you really have it in the interview. But what is in the interview, if it's interesting, I try to put that in the beginning. And I'll also talk about my own observations. I may talk about how, what I had to do to get the interview. It's just, why it was difficult. In Mark, like in some cases, I may talk about the surroundings. For example, Marcus lived at this mansion in Malibu, and I remember driving up, and there was this like huge gate, so just in that describing that, I said it's sort of, you kind of enter a gate which looks like it get held up under a Panzer division, So I try to convey what my own thoughts and feelings were, and be descriptive as much as I can where it's relevant. So the beginning narrative could be anything. It depends on the trader. It depends on the circumstances.
So, do you write the narrative first before the edited interview, or that comes later?
That comes at the end. So I do the interview first, and then I don't know if I do the conclusion first or the narrative first, but the conclusion section comes obviously after the interview, and then the narrative is just a separate piece.
You interviewed like many traders, but I'm just curious, how do you remember all the different narratives, the different environment, the context of all these different interviews that you've done?
I'm writing these after, so I do have to take notes and stuff, while it's fresh in my memory. So after I do an interview, I may sit down in my hotel room and write down some notes about things that occurred to me or
Yeah, because if not, you just quickly forget about
it. Yeah. So you have to, and yeah. So that's important. Like, or like sort of like I think about a lot. It comes up all the time in different ways. So like I remember interviewing Bill Lipschitz, who at the time was ex-Solomon Brothers. He had traded huge currency positions at Solomon and going off to be his own trader or manage his own money. Not his own money, but become a money manager on his own. And I interviewed him, and we spent a couple of hours, and it just really wasn't going anywhere. And then we ordered Chinese food, and I had the tape recorder off, and then he starts going into interesting stories. So that type of situation is something that I would convey, or like I take a break to go to the restroom, and there at standing height is a quote screen. So he has quote screens all over, but the fact that he has a quote screen at standing height in the bathroom, I thought was particularly humorous, So I put stuff like that, and of course I'll make notations of all those things, and then that will go obviously into the initial narrative.
So it basically is the things that stick out like a sore thumb to you, that you kind of like bring in all this.
Anything that makes me smile, So, yeah. I kind of think that's amusing,
It seems that when you write this Market Wizard books, there's a lot of costs involved, like, you're booking of your hotels, the flights and stuff like that. And you have no idea whether how well the book will sell. Is it like all this cost is borne on you?
Yeah, I absorbed the cost. At this point, and I'm pretty efficient. So when I do one of these Market Wizard books, I try to group the traders. So in the last book, I had quite a few London traders. I think at least 4 that I can think of right off the bat were London traders. So I did all of them. In fact, I had more than 4, but in every book, there are interviews I end up not using because I feel they're just not good enough to include in the book. So I might have had like a dozen traders. not a dozen, a half dozen traders. And so I had them all, I had the trip arranged, so I had like one every day, or in some cases two in a day, if I thought that there was the type of thing where it could be two in a day. So I make it pretty efficient in that respect.
It's because earlier you mentioned something along the lines of, you interviewed the traders, but their interview didn't make it to the book. I'd like to hear, what's the reason for that?
Lots of reasons, but if it bores me after my best, in many cases when an interview is not in the book, I don't even try to edit it. I go through it, I listen to it, and if I find myself almost never really wanting to stop and take stuff out, if it's not interesting to me, I can't expect it to be interesting to anybody else. So I think you need to be able to cut stuff and not use stuff that's not good. So I think it'd be a big mistake to include subpar material. And so
And how do you?
the reason may be a lot of times it's because the type of trading a trader is doing may just be inherently not very interesting. It could be some sort of arbitrage or whatever. It could be something that just doesn't. Maybe the guy made money and did it right, but there's no drama to it. There's no lessons to it. It's just there's nothing to really pull out of it that I leave as far as I'm concerned. So if I drop an interview, it's because there's not nearly enough anything that I consider would be helpful, and there's very little, if anything, that I consider interesting or entertaining or anything like that that would make a good read. So those are the reasons I just don't want to. I don't want to put anything into as a chapter that I myself wouldn't want to read.
So before you interview them, I guess you would have to let them know that there's no guarantee you'll be featured in the book, blah, blah, blah.
Yeah, I don't think I ever mentioned that per se. I don't think anybody ever asked me, will this definitely go in the book? I don't think, so I make no guarantees ever about that. The only thing I guarantee is I guarantee that they'll be able to see the chapter before I publish it. And the reason for that is I did that from the very first book on, is because I'm trying to get the trust of people, and I want them to be honest and open as much as possible. If somebody's giving an interview with something that's going to be in a book, they're going to be particularly cautious and sort of self-editing themselves a lot of times. And I try to minimize that as much as possible. So by telling them, look, go wherever you want, whatever. If there's anything that ends up in there that either you feel is not correct, or for whatever reason you don't want included or is problematic, then we won't use it. We'll either figure out a compromise that we're both comfortable with, or I won't use it. And it doesn't happen too many times. That in some cases, most cases, it doesn't result in hardly any changes. In some cases, some changes, but it really is a big deal. But I think it makes people more comfortable.
Okay. And by the way, Jack, we are currently around the 1 hour mark, so I just want to check in with you to see how you're feeling.
You can go a little further, sure.
Okay. Do you want to get some more water for yourself?
Let me get some more water.
Sure, go ahead. Yeah, by the way, I really like when you shared earlier, right, that, interviewing, right, you don't want to have a list of questions, you just follow it, bullet by bullet, because that's what I used to do. Then when I heard that from you, I tell myself, yeah, that's a good point. I should just kind of throw away the questions, go through the conversation, see where that leads to.
Have a conversation.
And then at the end, I kind of check what I missed, right? So yeah, that was a very good point, a good tip. Yeah, love that.
Yeah.
So going back to the market wizards, right? So I think I'm going to steal this question from you. I think you shared this. Like, what is some of the more painful memories you had while writing the Market Wizards series?
No, and I can't think of any painful memories really. I was doing what I wanted to do, and it was largely successful. So there were no, nothing painful. There was occasionally an interview I couldn't use, where I didn't want to use it, but the trader had other reasons for not wanting to grant permission. But that happened rarely. And but other than that, I can't think of anything that was painful.
Is there any like maybe things that happened right during this entire journey of yours that brings a smile to your face?
No, I don't. It's been just so much through my entire adult life. I mean, it spans from 1988 through the most recent book, 2020. So, and some updates even more recently last year. So it spans a good part of my adult life, and it's not like an isolated thing. So it's been part of my career essentially.
Okay. And since I think it's like good 30 plus years now, and you've interviewed so many since the 80s and 90s. So do you know like how many of these market wizards are still trading today, right?
No, I don't. Well, of course, in many cases, they're not trading because my original interviews were done, as I said, in '88. So that's quite a so not all of them are alive anymore, for that one matter. And certainly, many of them are retired and stuff. So, but once I do the interview, I don't follow up. There was an exception where and for this last book, Unknown Market Wizards, I did go back. The book came out right before my last interviews. My last interviews were wrapped up sort of months before COVID, and so after the book was finished, we had COVID, the bear market, and then we had the big bull market recovery, and then we had another bear market. So kind of interesting times, and it led to the question, well, these people have done so great. What about this subsequent period with a bear market, a very sudden reversal, and then another bear market eventually? And just so, how did they fare, and what were their experience? And they were also interesting periods. So I wanted to know, how did they navigate all of that? And in some cases, that led to some pretty interesting stories. So in that particular case, I did go back a few years later and did an update, which coincided with the release of the paperback version. So the paperback version has the updated interviews as well, whereas the original hardback didn't. But that is the only time I actually went back and followed up. Although I think actually with Stock Market Wizards, there was the bear market began. So a couple of years later, when the paperback was coming out, I did update at that point. So I guess I did it then as well. And those are the only times, but they were done a couple of years after the original book. But I haven't gone back and followed up with traders I interviewed 10, 20, 30 years ago.
I think for me, the Stock Market Wizards was kind of like a special book because Stock Market Wizards, right? So I'm thinking there could be open up for further opportunities like options trading market wizards, a day trading market wizards along those lines.
Yeah. Yeah. So well, yeah, but to be fair, I actually had stock traders in all the other books too. So one of the dilemmas you have doing a book like is once you got something like Market Wizards, it's got to be in every title, right? Because it's kind of a brand name. So okay, so the first time you got Market Wizards, the second time around you can do New Market Wizards, yes. But then you kind of so each time it's a bit of a challenge. So that particular point, I said, well, I'll do one all stock traders. So I did stock market. So I could use the title Stock Market Wizards. But there were stock traders in the other two books as well. And then with hedge funds, again, I needed an angle. So I thought, okay, this time I'll do only hedge funds. In the other books, you had hedge funds, but you also had individual traders, And then I said, well, I did hedge funds. Let me do the exact opposite. Solo traders, that nobody knows of. And that was Unknown Market Wizards. And if I ever did another book, I don't know what the hell I call it because I'm running out of preface words for Market Wizards.
The latest Market Wizards.
Yeah, well, I kind of
Yeah.
amusingly think if I ever did another one, maybe I should just call it the last market visits because I wouldn't do another one after that. So, but I don't know if I'll even do another one.
Right. Okay. I think I heard somewhere you mentioned there was maybe a ladies one, right? Where it's all female traders, something along those
I
lines. Yeah.
always tried to find women traders, but very difficult because look, I'm looking for people who've done it for a long time, and to find women um, who've traded for a long time, high success, it's difficult, and so it's not that I don't want to include women. I would like to, but you don't have. There's just the demographics are such, and it'll probably change. But if you're looking for people with 10, 15-year track records, uh, particularly when I did the earlier, the other market was the books up until the more recent one, you just didn't have those type of records. So, I mean, there was an occasional exception I could find, like in stock market was Dana Galante. She was a short seller. So when I could find a woman trader, I would use them, but I had trouble. All the traders I kept on uncovering happened to be male. It wasn't by choice. I did do, I did interview another woman. Well, one interview I ended up not using in the last book was I did interview a woman trader who was good and actually had some interesting stories in a sense, but her methodology was just so esoteric that I just didn't think it could relate to. It could relate to and most traders just couldn't relate to it. It was just a very esoteric methodology. And there was another woman trader I tried to get who just didn't agree. Didn't want to do it. So, but I have trouble finding even just a few, and let alone to fill a whole book with women traders. It would be if I had that, it would be a fair topic for a book. It would be a
So after the interview, then you tell the person, maybe the ladies, hey, your interview didn't make the cut. So what's the kind of response you usually get when you tell them
I
that?
actually don't. Well, oh yeah, I guess I maybe do. I probably say always. Well, I'm always honest. I think in the most recent book, I said, hey, it turns out I'm not going to end up using it. There wasn't enough material in here that I felt would be, of interest to readers. But thank you for participating and that type of thing.
All right. So, okay, now we're going to move on to the next section, maybe talk about trading and, about the financial markets. So I like your answer. I think I heard on a podcast, you gave a very good answer to why you don't believe the markets are efficient. And I would love to, hear that from you.
Why I don't use what?
Why you don't believe the markets are efficient.
Oh, markets efficient. Yeah. So plug here. I mentioned the book I wrote, Market Sense and Nonsense. When I told you it gave me an opportunity to get on a soapbox and complain about things I think were wrong. And there's a whole chapter in there called the deficient market hypothesis, in which I go through like a dozen plus reasons why the theory is wrong. And they range. There's a lot of reasons, but let me just go through some of them. One key one is people say, well, everybody has the same information, and therefore, and if new information comes in, everybody gets it, and therefore you can't beat the market because it's instantaneously discounted. So one thing what's wrong with that is that even though everybody has the same information, not everybody is going to be equally skilled in using that information. So an example I use when I give talks is, you have a chess tournament. And so everybody knows all the chess rules. Everybody has read the same chess books. Everybody knows all the same classical chess openings, and everybody has the same information. But there's going to be a Magnus Carlsen or a Gary Kasparov in his day who will just crush everybody else. It's not because they know something everybody doesn't know. It's not that they have some hidden information. It's just that they are more skilled in employing the information that's there. And the markets are the same. There's like thousands of ingredients of potential information in the markets. And there's endless ways they can be combined and used, and how you can react to that information. And some people are going to be more skilled than others. So that's the kind of inherently wrong thinking. One thing I do when I give talks is I sometimes use a slide where I'll show a traffic jam, and sort of the efficient market hypothesis of the markets is the markets are like a traffic jam. You're in one lane and you try to switch over to the other lane, and you keep on switching back and forth, trying to get ahead. And half an hour later, you look to your side and it's the same car on your side, and you just can't get ahead because everybody's on the same, they got the same impediment. And then I put up a slide and I show a motorcycle going between the cars. So everybody's using it, everybody's using the same road, but some people have a more efficient way of doing it.
All right, that's a good
Yes, that's
good
a
one.
good analogy, right? Okay, another thing then there's the empirical argument. There were just too many examples of markets which were ridiculous, totally absurdly ridiculous. The classic is the internet bubble. So the internet bubble, we have the internet stock index goes up sixfold, 600% in a year and a half. And then it goes down 80-odd%, enough basically goes down that percentage, which brings it all the way back to where it started, right? So you have the 600% rise in 18 months and an equal decline all the way back down in the next 17 months. So if markets were efficient, hey, there must have been some really dramatic bullish news going on during that first 18 months and some incredibly bearish news going on in the next 17 months. I mean, I challenge anybody to find fundamentals that explain that. You had companies that had business plans that never made money, that could never make money. I mean, the companies where, I joke about like one of the companies like Pets.com, which just became famous as an example of one of these failed companies, because back then the shipping cost was so expensive, and they were selling a lot of things like dog food, which are heavy, and so they were losing money on most of their sales because it was costing them more for the product and the shipping than they were making from the sale. So I kind of joked that they went broke in 9 months, but they could have lasted longer if their sales weren't so good. So, because the more they sold, the quicker they burned money. And my point is, you had companies that had these models that just didn't work at all, never worked. And they initially, they made a lot of money. Or not Pets.com didn't, but there were a lot of worthless stocks that went from 10 to 200. So there's not the fundamentals that changed. What happened was it sort of became this mania where everybody's making all this money internet stocks. And my neighbor just bought these internet stocks and he just made 100%. And he get more people come in and more people come in. And the people who didn't come in finally can't stand it, seeing everybody else making money and they get it. But it's like musical chairs where at some point the music stops and somebody's left holding the bag, and it's just these stock goes from 10 to 200, then goes to zero. It was never worth 200. It probably was always a zero. But it's not that the fundamentals changed. It was basically the human emotions that were driving it to excess on the up and excess on the down. It's not that the markets were not efficient. If they were efficient, you would never have that type of pricing. And that leads to another basic problem with the efficient market hypothesis is I use the example that it's the efficient market hypothesis is like a recipe for chicken soup without the chicken. Because what does it leave out? It leaves out human emotions. Now, human emotions are very difficult to quantify in any way. But the true fact is markets don't just act on fundamentals, they also respond sometimes more on human emotion than on fundamentals. And if your model leaves no room for human emotions or human irrationality, like behavioral economics will argue, then your model is lacking a key ingredient. So that's another thing that's basically wrong with the efficient market hypothesis. And the empirical examples go on and on. I mean, the crash in '87, 29% in futures. The cash market never caught up. The tape never caught up. But I think in futures it was a 29% decline in one day. Interestingly enough, in a day where there was no really big news. But if the markets were efficient and were normally distributed, the probability of that would be it wouldn't occur. It wouldn't occur in a number that is mind-bogglingly long in terms of zeros. We're not talking about trillions or quadrillions. We're talking about some minute fraction. So events like that would never happen in the history of the universe, let alone the history of modern mankind. So there are too many things that happen empirically which couldn't happen if markets. Another one is just the traders I interviewed. Ed Thorpe, his first fund, 19 years, and he has 3 losing months in 19 years. All of those losses are less than 1%. Now, I did a probability distribution, just a simple binomial distribution, and I made the simplifying assumption that the gains were equal to the losses, which is actually conservative because his gains were larger than his losses, those 3 losses. So the probability I came out with was for Thorpe to have made that without skill, versus the market's efficient, nobody can beat it, right? So Thorpe shouldn't be able to beat it. But the probability of his getting that type of record of 19 years of positive months with only 3 losing months was equivalent to picking one atom from the mass of the Earth, not the surface, from the whole entire mass of the Earth, and then randomly doing another atom selection and getting the same atom. That probability is higher than Ed Thorpe's record. So people can say, yeah, if you have enough traders, somebody's going to make money. Well, yeah, somebody's going to make money, but to get somebody's track records are probabilistically impossible. It's like the argument of, well, if you have enough monkeys hitting random keys on a typewriter, some monkey's going to type Hamlet. Yeah, but how many monkeys do you need, to do that? And there's probably more monkeys that can fill the visible universe. So it's the same type of argument. It sounds right, but it's wrong because when you get down to the numbers, they're just much more extreme. So yet that empirical argument comes up in many, many different ways. So those are some of the factors. There are other things, but that should give you a flavor.
Yep. So, I mean, after you've interviewed many traders, you've seen the different types of strategies that they have employed. So I'm curious to hear, are there any strategies that worked in the past but doesn't work anymore today?
Yeah, there are lots of strategies. Markets change, and things that work stop working. I mentioned Thorpe. I mean, he originally started out on the market side of it, trading options, warrants, and that was because he had mathematically derived the equivalence of the Black-Scholes model. But years before the famous Black-Scholes model paper was published, then you get to the point where there's also programs with option pricing and everything else. So that edge goes away. He goes from being the only person who knows how to price options to basically everybody having the computer power to calculate out. So then he goes to a different strategy. He goes to statistical arbitrage, and eventually that stops working well, and he goes to convertible arbitrage. And eventually, so he kept on changing as the market, his methodology, as the markets, as things that weren't efficient became efficient. Something like trend following. The first Market Wizard books, a number of the traders did spectacularly well with trend following. I mean, you have extraordinary stories of traders successful with trend following, essentially trend following. Trend following by itself no longer works anything like that. I mean, yes, there's still trends. There have always been trends. There's a reason why there would be trends. There is a logical fundamental underlying principle. But what has changed is because trend following became popular, and you have so many computer programs being sold and software sold to do trend following type of things, and so many different CTAs using the same type of approaches or very highly correlated approaches, that very participation of so many more traders doing the same thing leads to a lot more false breakouts. So while you still have trends, you'll get a lot more, not only false breakouts, but I think there's a greater predilection to violent reactions within the trends that make those trends very difficult to follow. And not in all cases. Occasionally you'll get a smooth trend. I mean, we've got a smooth trend going on now in the stock market. So they do happen, but they're more the exception than the rule.
Yep. And I think from what I've also gathered is that you believe that the exceptional super traders is kind of like is whether you have it or not. So I guess your genetics do play a part. What's your take on that? I think that's what I heard right from the other episodes you shared.
Okay, so repeat the question. I mean, I'm not getting the essence of the question.
Okay, so try this again. Like running a marathon. Not everybody can run a marathon at the Olympic level, right?
Yeah.
So trading at to be a super trader, not everybody can be a super trader, but they can at least still be a profitable trader.
Yeah, I agree. So I mean that's true. I mean, people ask, can anybody be a market wizard? And the answer is no. Can anybody run in your? I've used the same example when I've given talks. Is everybody who's devoted enough can train to run a marathon. Even people with serious handicaps have managed to do it, right? I mean, it's a matter of commitment, training, everything else. It can be done. But no matter how dedicated you are, no matter how hard you work, for the vast majority of the population, it will be impossible for them ever to run world-class marathon times because their bodies just aren't built to do that. You not only have to have the work and the dedication and everything else, but you do have to have a very specific body type to be able to run a marathon at world-class record speeds, right? So and we talked about mathematics. I mean, I could love mathematics, but I didn't particularly have the skill to be a mathematician, let alone a good mathematician, right? And it's true of most people. Most people, even if they like math, wouldn't have it. You have to have a special type of mind to be a mathematician. For music, I don't care how many people practice how many years on the violin. You're just not going to be the first soloist for the New York Philharmonic. In most cases, you need that plus some innate talent. So why should trading be any different? It's certain people have some innate skill, and it's not a particular skill because people's methodologies are all over the place. So if it's different for everybody, for everybody, it could be an intuitive type of skill of the markets. It could be a quantitative skill. It could be anything. I mean, certain people just have talents in certain niches, in certain areas, and some people have that talent in the trading strategy they develop. So I don't think everybody could be an exceptional trader. I think most people can end up being net profitable, but not if they do everything right, but not exceptional. I think that's the exceptional by definition means that everybody can't even be average, let alone above average. Everybody can't be above average by definition, right? Everybody can't be above average. Let alone everybody can't be exceptional.
Yeah, so I can understand in a way you're coming from when you say that certain people have certain physical attributes that favor them to perform well in certain sports.
So I've been around a long time, obviously. So I've seen a lot of big changes. For one thing, we've gone from trading pits to fully electronic trading. Well, thank you from the top. So changes, one big change has been, going from pit trading to electronic trading. Obviously, a dramatic change there. Um, Commissions, you've gone from high commissions to, well, zero commissions, but you then have slippage, which you always have. So dramatically reduced cost. You've gone from no computers except for the occasional, you know, large computer back in the, which wasn't really accessible to anybody but academics and people in corporations and had very limited power even then. But you're going from a world of really no computers to the general public to one where you have powerful PCs in the hand of everybody and where you have supercomputers in the hands of some professional traders. So that's the computerization, I think, is a major, major change. And we're coming with the computerization, you have all this proliferation of data of all types. So there's, and by data, I mean not only just fundamental data, but let's say price data. You didn't even have daily price data computerized, accessible in my early years in this industry. Whereas, for many years now, you have any time interval you want, down to minutes or even fractions of minutes, right? So you have all that data available, plus all the fundamental data, and it's available to lots of people. Um, then you have the availability of all this computing power has been accompanied by a tremendous influx of quants into the markets. So you go from a situation where you had virtually no quant funds originally to now a world where there are multiple quant funds that have literally hundreds of people, hundreds of PhDs, I should say, quant PhDs working for them. So that's a very different world. So the markets in that respect have changed a lot. The one thing that hasn't changed, obviously, is human emotion. That's the one thing that stays pretty constant.
Even the quants that are operating on their systems, there are still emotions involved, right? Especially when they go into a drawdown, how they're going to
Yeah,
react to
well,
it when they pull the
you've had
plug and
some
stuff like that.
you've had some famous examples. I forget which year it was, but it was well over 10 years ago. But there was an instance where market neutral funds were doing well, and there was a situation where all the market neutral funds were in the same long the same stocks and short the same stock, and something triggered something, and you had these funds which were kind of nice, having nice smooth performance, all of a sudden print these enormous losses, and so you had it very quickly, and you had to have decisions made. Do you stay with the system? Do you liquidate them? So even then, human decision and emotions had to come into it.
So where do you think, or rather, how do you think discretionary traders would then, find their place in this world where, technology is advancing quickly, the rise of quant. So where does, discretionary traders,
Yeah.
do they
So
still have a place in this world?
yeah. So I would have thought that it's become much more difficult, right? And logically, it should be. Yet, when I did this last book on non-market wizards, I found these discretionary. They were all except one were discretionary, and in fact, the least impressive track record was by the systematic trader. His track record was fine, but not in the same league as the other discretionary trader. So everybody else was a discretionary trader, and some of them had truly just mind-boggling performance records. And so somehow despite competing against these mammoth firms with hundreds of quants, they were able to, have performance numbers that were way better. Although, of course, they're trading much smaller amounts of money. They couldn't do it a lot. You couldn't have those type of results with large sums of money. But nevertheless, they're still getting those returns in liquid markets, and somehow it's possible. It's still possible. Everybody figures out not everybody, but those that are really successful figure out their particular edge and their particular edge is, I guess, the best way to put it, and are able to pull it off. So it's still possible.
Like
Again,
being
empirically, it's possible.
Yeah, I like to hear from you also, like I think trading principles is usually pretty timeless, like, cut your losses, ride the trend, blah, blah, blah. So are there any principles that were largely true back then, but is maybe no longer true today?
Oh, you mean trading principles that were true once but are not true today?
Yes.
Yeah, well, actually, take a practical example. I took the original Marco Wiz's book, and then it was like 30 years later. It was 30 years later, but maybe 25 years later. But decades later, did a update where I added a chapter, and in other words, the chapter I added was looking back, what do I think now type of thing, 25 years later, or whatever number of the years were between that 2012 edition and the original. And really, there was nothing that I put in that first book that I didn't think was still true. So kind of basic trading principles do stand the test of time. Markets may change, but because people don't change, basic market principles that are true continue to hold true. That's why a book like Reminiscences of a Stock Operator, which I read 65 years after it was written, back in my youth, it was written back around the 1920s, rang true to me then, and it still rings true to people now. And my original books, let's say original Marco Wiz's book, more than 30 years later, I think still rings true to people today. So, because I think trading principles have some time immortality to them.
All right. And you have, interviewed a lot of, successful traders, and I think you also shared, what are the commonalities, right? So maybe instead of going down that route, I'd like to hear, maybe, in your opinion, what are some type of people that shouldn't be a trader, that shouldn't go down this trading route?
Sure. People who are very dogmatic, who insist who believe they're right all the time, who aren't open to changing their mind. That is a very bad personality for trading. I mean, one common denominator that almost all exceptional traders share is this flexibility, this ability to turn on a dime. So that's an example of somebody shouldn't go into trading. People, I think, people who need to win shouldn't go into trading. If you need to win, because if you're financially desperate to get money, that's a recipe for disaster. People who are mainly motivated to make money. In most cases, that's not a good sign. If that's your motivation, that's probably not a good sign. If you're highly impatient, by the way, which is a trait that I have, which is one of the reasons I don't consider myself a good trader. But that's a bad trait for trading. To be a good trader, you really need to have a high degree of patience. So those are some traits that are adverse to trading.
So yeah, maybe we can move on to the closing section now, right, Jack? I think it's almost 2 hours now. It's pretty late for you.
But yeah, I'd like to wrap it up at this point. Yeah.
Yeah. So I think just a couple of questions. Maybe just couple of questions. So is there anything that you'd like to add that you didn't have a chance to cover?
No, I think we covered a lot.
Okay. So the last one will be where can traders find and connect with you?
Basically, I am on Twitter, so at Jack Schwager. And I mean, I guess that's probably one spot. You can get, Fund Seeder, you can communicate through that, I suppose. I have a website which I don't really update, but jackschwager.com is there, and, you can get information how to contact me through there as well.
Okay, great. So thank you so much for your time once again,
Okay.
Jack. I appreciate it. It's late
Sure.
for you, right? You shared so much, and yeah, thank you for your time. I appreciate you.
Have a good one. Take care.
You too. Take care.
Bye.
Bye-bye.